Good morning. Yeah, so there is a saying it's often allocated to Mr. Lenin, who says that there are decades where nothing happens, and then there are days where decades happen. And when I try and fit this into the automobile industry, you can actually see that happening. That, say, for the past 80, 90 years, there was not too much advancements. Of course, there were things that safety being a big prospect. Then you had a lot of technologies coming in, but nothing as much that has happened with alternate fuel that has come in over the past 2 decades. Say for the past 80 years, there was a constant list of OEMs. But over the past 2 decades, what has happened is you've got a whole host of new OEMs coming in. Say something like a Tesla, which was birthed 20 years ago. Even other players such as BYD, NIO came into prominence now. For example, you've got a mobile phone manufacturer starting off with LE and now Xiaomi, who actually got into manufacturing vehicles. That is the global. So, which is why the saying is very apt for the automobile industry, wherein over the past, I would say, decade and a half, there's a whole host of changes that have happened. And going ahead, that is only expected to continue. Most of you would have heard of this term called ACEs, right? Autonomous Connected Electric Shared. And that is actually where we see the future of the automobile industry. Be it any of the segments, be it two-wheelers, three-wheelers, commercial vehicles, even passenger vehicles, this ACEs aspect is playing out. And while that is, laying the land on the global side, the similar aspect change is also happening in the Indian market, which is what we'll be here to discuss, right? Say, for example, when I spoke about new OEMs entering, that is specifically true when I speak about the two-wheeler and three-wheeler segment. And some of our audience here may represent some of the new OEMs. Say, for example, you've got the likes of Ola that's got listed, you've got Ather which has filed. There are a whole host of new companies that have come up manufacturing vehicles. And not just vehicles, when you look at especially electric, there's a whole host of other companies that have come up in the entire ecosystem. The ecosystem could be about batteries, could be about charging, could be about financing, leasing. All of these opportunities have opened up simply because of the transition that is happening to alternate mobility. And all of that is basically what has happened in the auto industry, and the auto industry was one which contributed for about 6 to 8% of India's GDP. It is also an industry which you could say, when I look at, when the government focus has been on manufacturing since 2014. But the automobile industry, I would say, has been one of the earliest winners in the manufacturing space. We started off with about 40-50% localization. In most vehicles, we are at 90% plus. Of course, with EVs, that has gone down a bit, but we are still at about 90% plus localization when it comes, and that is one of the few industries, which is automobile, that has happened. Now, having spoken about the overall industry, I'll spend some time going through those segments. Now, what has happened is, of course, the COVID pandemic impacted different segments differently. And when I speak about segments, I'm speaking about sectors, say service-heavy sectors, such as aviation, hotels were significantly impacted. But the recovery has also been very fast. When people spoke about a V-shaped recovery, for example, aviation is the best example, that during COVID, you fell down to about 20% of pre-COVID levels, passenger traffic. But right now, you are back higher than pre-COVID levels. The airline sector, hotel sector has been one of the better performing sectors, even in this slowdown that has happened. Similarly, when I come to automobiles, we look at the various segments, and even across the various segments, the recovery has been different. And the way to read this chart is, these numbers are wholesale sales recorded by the OEMs to dealers. The numbers here above on every chart are the annual growth rate, year-on-year growth rate. And this box in blue is basically my multiplier. Multiplier as a percentage of pre-COVID levels in the fiscal 19. So what really stands out is, be it passenger vehicles, be it commercial vehicles, be it three-wheelers or tractors, which is not here, but even tractors, all of these four segments have already surpassed pre-COVID levels of sales. It is only the two-wheeler segment, which, despite the high EV sales, which EV sales are almost touching about 1 million units in this fiscal, we are still expected to be only at 94% of pre-COVID levels. And that is what is stark, because, say, for example, commercial vehicles, despite, as I said, the slowdown in the commercial vehicle segment is expected, or it is known to be a segment which really represents the strength of the economy. So if the economy is doing well, the commercial vehicle segment is expected to do well. It is basically a leading indicator. One way that people get to know how the economy is doing well, you start looking at commercial vehicle sales. If commercial vehicle sales are picking up, that means it's a high frequency indicator to know the general strength of the economy is good. So despite the slowdown, commercial vehicles are at 2% above pre-COVID levels. You've got passenger vehicles, which has been one of the fastest growing sectors after COVID in line with airlines. That is at 26%, is expected to close 26% above pre-COVID levels in fiscal 25. Uh, Even the three-wheeler segment is 24% above pre-COVID levels, but it is two-wheelers which is lagging, which is still 6% below pre-COVID levels. And we will see some reasons why that is the case. Since we are speaking mainly about two-wheelers and three-wheelers right now, the next section of my PPT will focus specifically on two-wheelers, followed by three-wheelers. Uh, Now breaking down two-wheelers further, as I said, we are at 94% in fiscal 25. Even fiscal 26, we expect 8% growth. And only on this 8 to 9% growth are we seeing us recover to pre-COVID levels. Uh, when I break it down further, say when I speak about the motorcycle segment. Now, the motorcycle segment has been for more impacted than scooters, and the reason for that is, of course, that motorcycles has more of a rural phenomena. So, in the post-COVID years, which is fiscal 21, 22, 23, motorcycle sales were 21 they did well. Because we saw that rural economy wasn't as impacted in fiscal 21 because agriculture was allowed to continue. Also, what happened is during the lockdown, there were not too many other avenues for people to spend, which is why motorcycles and tractors, which are both dominant by the rural economy, did very well. However, in fiscal 22 and 23, as things started opening up, as there were more avenues for spending, and also agri was impacted in 22, we saw that motorcycles did not recover as much as scooters. So, motorcycles is expected to cross pre-COVID levels only in fiscal 26, which is what is dragging my entire two-wheeler segment down. When I look at scooters, and scooters account for about 35% of overall two-wheeler sales. When I look at scooters in fiscal 26 will also surpass. This is only ICE scooters. So if I'm only looking at ICE scooters, they will not surpass pre-COVID levels even in fiscal 26. But when I add EV scooters, when I look at ICE plus EV together, we are higher than pre-COVID levels in fiscal 25. And the reason is that basically there's been cannibalization. People from the two-wheeler scooters or from ICE scooters are moving to EV. And that has been supported by a whole host of initiatives, be it FAME, be it the PM E-Drive scheme. And of course, now with revamping of the scheme, wherein the subsidies have, despite the subsidies being lowered, we are still seeing healthy sales, and that is because models have been launched across various OEMs. You have the new age OEMs that have been launched models. You also have the traditional OEMs that have launched models. And in fact, it's the traditional OEMs which are now leading when it comes to monthly sales compared to the new age OEMs. And what this has done is, say again, when I go back 2 years, the FAME scheme really subsidized the entire battery cost because you could get subsidy up to 40% of your vehicle cost. When the rejigging happened and reduced to 15%, that is when the OEMs realized that launching bigger batteries does not help because the ideal use case of about 30 to 50 kilometers in a day would be used by 90% of the public, except of course the B2B sales, which would be your Swiggy, Zomato, and the kinds. So as lower battery sizes started coming in, the vehicles also became cheaper. Of course, battery costs also came down, which we will discuss in one of the panels going ahead. And these two aspects helped pick up sales for the domestic e-two-wheelers, which were at about, say in fiscal 22, we sold only about 0.3 million. We've almost tripled, and we've almost quadrupled. We are expected to close the year at 1.2 million plus. So that is, despite subsidy being reduced, what has helped is a number of new models coming in across OEMs. And second, you started seeing battery sizes ranging from 2 to 4 or even 1 kilowatt hour, which actually helps meet the use case of the public. So this was the overview of the entire two-wheeler space. Now we spoke about recovery not happening. Now some key reasons that we've put out, and of course we'll uncover more in the next panel, but one key reason is that if you see this chart, what we've done is we've looked at your TCA, or basically vehicle cost on acquisition. Between fiscals 18 to 23, for an entry-level motorcycle is this analysis that we've done, and also for an entry-level scooter, prices went up by 45%. And there are a whole host of reasons. One, of course, you had the 3-year third-party insurance rules that came in. You also had the safety norms that kicked in. You had the transition from BS4 to BS6. No other global economy has jumped 2 steps directly when it comes to emission norms, but India had to do that. So say, for example, when it came to an entry-level motorcycle, you had to let go of your carburetor engines and you had to go to DTSI technology. And which is why my cost went up by 45% over a 3 or 4 year period. But when I look at my customer base who is buying it, now my motorcycle segment, as I said, is dominated by the rural segment. Now the incomes of the rural buyer did not go up by 50%. That is one of the major reasons why the two-wheeler segment has still not recovered back to pre-COVID levels. And what happened is a lot of replacement demand that came in also got deferred simply because the prices went up significantly. But going ahead, now why this recovery is playing out is after the 45%, my vehicle prices growth has sort of stabilized, which is even less than inflation. Prices are now rising by 3 to 4% only. Secondly, my running costs have also stabilized with petrol prices in fact being cut. My running costs have stabilized. Further, my volumes up for replacement is pretty healthy, and as incomes have started improving, there has been a whole host of schemes wherein MSP for crops has increased. Your financing, in fact, now with the finance cut that has been, in the interest rate cut that has been announced by 25 basis points and further expected going ahead, even the new laws on the taxation, which is expected to improve improve cash in hand by about 83,000, which is technically my cost of an entry level or a mid-level two-wheeler, is significantly going to help sales in the next fiscal. This is why we expect that in 26, after a 5-year lag, we expect sales to get back above pre-COVID levels. But as I said, there are various shapes of economy. We spoke about V-shaped. What has happened here is there's a K-shaped recovery that happened. This is specifically for motorcycles. And on the motorcycle side, if you see, these are the three numbers I'd like to really concentrate on. Basically, the motorcycle segment can be divided into entry level, executive, and premium level. When I look at my entry level segment, and I've looked at data for the first 9 months of this year and then done an allocation for the full year, we've recovered only to 70% of pre-COVID levels. So that is where the struggle is. Because my entry level accounted for 71% of sales in fiscal 19 and it is now down to only 45%. So the entry level has still not recovered as much simply because the price hike has been the highest for the entry level. When I see executive, we are almost there. We are at 96% of pre-COVID levels. But it is really the premium segment that has dragged or that has, really pushed up sales for the motorcycle segment. And we will uncover that in the panel wherein we've got panelists from two premium bike manufacturers. But if you see the premium segment, we've actually doubled sales. From 9%, we've gone to 18%, which is only the share. Sales have gone up even more. And you see that we are 30% above pre-COVID levels. If you remember my slides earlier, three-wheelers were 24% above pre-COVID levels, passenger vehicles were 25% above, but it is actually premium motorcycles are 28% above. So when I look at all my automobile sub-segments, it's the premium motorcycle segment which has been driving the recovery and which is expected to do well even going ahead. Simply because as we've seen during the pandemic, the K-shaped recovery has played out across sectors. Those who are well-to-do have continued to be well-to-do, and this is where it is playing out. If you see any other segment, be it, say, for example, when I speak about airlines on the business side, every airline speaks about how business recovery has been faster than economy. Indigo, which is a low-cost carrier, has actually launched business. When I see hotels, it's always the premium hotel segment which is doing better than my mid-level or entry-level hotels. So this K-shaped recovery has also played out in the motorcycle segment. Similarly for scooters, while there is no split between scooters, when I say split between greater than 125cc and less than 125cc for a premium and entry-level scooter, I see that growth happening faster in greater than 125cc compared to less than 125cc segment. Now coming to the three-wheeler segment, the three-wheeler segment is a whole altogether different beast. And everyone speaks about what is very different is that everyone speaks about how the two-wheeler segment is at the vanguard of electric mobility. That's actually not true. It's actually the three-wheeler segment. And we'll see that in the next couple of slides. Because, of course, volumes may be lower for the three-wheeler segment compared to two-wheelers. But when I look at actual penetration, we are almost at 33%. So what that implies is basically 1 out of 3 three-wheelers being sold in India as of today is electric. Whereas that number is only about 7 or 8% for two-wheelers. Of course, the volumes of three-wheeler segment is lower because now these numbers are in lakhs and not millions as you'd seen earlier. So we annually sell about, you could say 8 lakh units of three-wheelers. Of that, almost 1/3 of it is electric. So which is where the real action is happening. Even when I see the number of OEMs that have come in, three-wheelers have a whole host of new OEMs that have come in and a whole host of business models also have developed around the three-wheeler segment. When I see the split, now again, the three-wheeler caters to two major segments. You've got the goods segment and you've got the passenger segment. And again, the dichotomy that played out during COVID, if you see the goods segment accounted for about 20% of sales pre-COVID. During COVID, passenger mobility was of course impacted because of lockdown, but goods was not impacted, which is why goods demand, or I would say goods sales, accounted for almost 40% of sales. But now that passenger mobility has come back and everything that was not replaced in these 2 years has started getting replaced, we see that, say in fiscal 24, passengers accounted for about 84%, even higher than pre-COVID, simply because all the unreplaced demand during these 2-3 years actually played out in fiscal 24, and it is continuing to play out. But when I speak about electric mobility, the bigger transition is happening on the goods side and not really on the passenger side. When I compare percentages, it will be about 40% in goods and about, say, 15 to 20% in passenger only. And of course, the reason mainly being is on the good side, you've got a whole host of B2B use cases that have come up. There are major players that have got into the B2B space, which is not yet in the passenger side. So I'll spend some time on this slide. As I was saying that everyone speaks about electric two-wheelers, but it's actually electric three-wheelers. If you look at the chart in green, 25%. 25% of sales in calendar year 25 are electric. As of now, we expect to close out the year by 33. So as of now, 1 out of 4 vehicles sold are electric. We expect that to be 1 out of 3 within the next year or so. And the reason for that is, of course, a lot of cities have banned petrol and diesel vehicles. So CNG is the dominant option. But with battery prices coming down, a whole host of OEMs launching three-wheeler space, even the traditional OEMs, say when I look at traditional OEMs, it'll be the likes of TVS and Bajaj have started launching electric vehicles. Even Mahindra, for example, has set up a separate sub-unit under M&M, which focuses only on last mile mobility, and they've launched three-wheelers. So that is where, again, the transition is happening quickly. And one caveat here is, all of this data is only for the L5 segment. We are not considering L3 segment, simply because the L3 segment volumes are off the charts, and there is not one source where you can get an exact number of what is happening on the L3 side. Simply because, one, it's a very fragmented sector. Second, not all vehicles are registered or even need to be registered, which is where L3 is the difficult to put a number on, and we'll try and decipher some of it in the next panel that happens. So with that, I close out my presentation. This was to give a view on what is happening on the two-wheeler and three-wheeler side. Thank you.